gives me a good foray into sector rotation. Growth is back. So some of my videos that I've made I think in March and then May, I talked about sector rotation. And for those that are not familiar, I'll do a quick recap about sector rotation theory. So you basically have this model. This is a good thing right here to go through the stockcharts.com where they talk about the business cycle, but we're going to keep it simple to this. So the theory, and again, it's just a theory, is that when you have a market bottom, that tech stocks and discretionary, which can also be luxury goods, lead you out of a market bottom. And what happened last year in 2020 when we had a market bottom? Tech stocks, Microsoft, Tesla, Apple, boom, Zoom, went crazy, led us out of the market bottom. That follows the pattern exactly. And so the next things that you assume are going to lead as the market matures into a bull market are your industrials and materials. Materials are going to be, industrials are going to be the people that make things. Materials are going to be the input, the goods, the raw materials, the miners, things like that. And then as you have a market top, in theory, energy should lead. So let's see how that played out. Let's do about 65 days on here is what we need to look for. And then let's go back to the beginning of the year when we were evaluating this. This is on stockcharts.com. It lets us see. Okay. Good enough. So at the beginning of the year, well, let's go back a little bit. So this is going through about a quarter's worth. We're looking at 65 trading days. So tech stocks, where were they? This is from March up into, yeah, there's technology leading by about 10% almost. And pretty much through the whole year, it was leading. And then also discretionary. You remember our, let's start back a little, make it a little bit clearer. Because this is really cool, actually. It worked perfectly. Good enough. So technology and discretionary. Technology discretionary leading us out of the market bottom, which was around April through July, that period. Then materials and industrials. Again, materials and industrials as the bull market continues to mature. Worked great. There he goes there. Industrial starting to lead, materials as well, technology falling off a little bit, energy really depressed. But then around the beginning, there we go. Around the end of the year, energy exploded. And again, back to the sector rotation model, energy can sometimes signal a market top. I'm sure a lot of people, myself included, were looking at that. And that's why at the beginning of the year, I started putting money into staples, Procter & Gamble and Johnson & Johnson, because that was going to be the next potential move. And as time has gone along, they had a brief moment where consumer staples worked out well. But what's happened in the most recent time is technology has begun leading again. You've seen the return to growth. And growth is a general term for companies that don't pay dividends and they are just expected to get more market share, get more valuation. That's what growth means. They are companies like your Netflix, companies like your Facebook, tech companies. Got to be more things in tech, but growth is basic. Oh, genomics is all the stuff that Kathy Woods likes to invest in, all the ARK stuff. That's all growth. She loves that growth stuff. And again, ARK has definitely been recovering from May. I think the one that I'm looking at right now is ARKG. This is genomics. Again, all of her things look the same because since May, since the middle of May, in this last month and a half, growth has returned. It's become the dominant player again, which is not following the pattern that we would have expected based on the sector rotation model because energy was leading that. Man, we were at a market top, right? This kind of goes back to what I was talking about at the beginning of the video about how people look at the Bitcoin halvening model to justify their super bullish cases because, well, the last two halvening cycles that we've had, that was the case. This quarter, this time cycle we're in means that we're going to moon again. That's the theory that may play out. But here was the sector rotation theory that was following exactly. It was tech leading us out, discretionary, then it was industrials, then it was materials, then energy led. So you had 5 different sectors all doing exactly as the theory predicted. And then all of a sudden, tech is back again. Does that mean that we're in a market bottom and we're going to go up from here? Well, it's outside the bounds of the theory, so I can't really say. But this is just an example of how theories are just theories. And not everything always follows it. But it can be valuable to follow the theory anyway, because, as I said, 5 different sectors led one another. Would be a great sector rotation play over the last year. But cycles get broken.